Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they are moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can notice is that when it comes to the structure of this market, we can easily identify this level here as being the previous level of supply and resistance from which all this move to the downside was created, which at the moment just got tested once again, rejected to the downside, and at the moment the market has still not gone for another retest of this level. So from a monthly perspective, it is clear how the market is rejecting this quite strong monthly historical supply and resistance area. And until it will continue trading below this level, it can easily be rejected to the downside. However, at the same time, we must also notice how at this level we have structure, because this zone was the previous level of monthly resistance that got broken to the upside with this move higher, and now that the market is currently trading above that zone, is also acting as support. So this market is actually trapped in between these two quite important levels. This previous level of support, which is still acting as support, and this previous level of resistance, which is still acting as resistance. So from a monthly perspective, we have a range-bound market. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, the situation already starts to be a bit more clear. First of all, let's see what kind of pattern the market has. Well, in this area here, in this area of price action, we can easily notice how the market has created this W formation. From here, we had the move lower, move high, move lower, and then the break above. And in general, after the creation of a W formation, what we could expect is a potential move lower for the completion of the W formation at the neckline, which is essentially the previous resistance turned support. And in fact, we can notice how this market has already started creating the move lower, completing this W formation. And what we can notice is that the completion zone of this W formation would be exactly the neckline, which is this previous resistance, which is now turned support at this level. So this W formation here will be completed if the market creates this move lower, completing the pattern here at the neckline. So there is the possibility to see some more short-term bearish price action when it comes to the weekly time frame. We can also notice that from a pattern standpoint, we have a clear impulse followed by a correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50% and 0.618 Fibonacci retracements lining up with this previous resistance turn support, which essentially combined with the 0.32 retracement, since it is also just above the neckline of the W, creates a quite strong confluence of support area that this market has a good probability of being attracted to. So from a weekly perspective, there is definitely the possibility to see first some little short-term bearish price action and then a rejection to the upside. Now, if we drop down on the daily time frame, what do we see? Well, from a daily standpoint, first of all, I had spoken about USDJPY a few days ago when the market was around this area, and I explained all the reasons for which we could expect this rejection to the downside, which in fact the market has just given us. And by the way, you will find that previous analysis linked in description, so you can go and check it out for more free education. However, at the moment, the price action also from a daily perspective is very interesting. But before we get in detail into what we have from a daily perspective when it comes to the technical aspect of this market. First, let's go and see what we have when it comes to the commitment of traders, so the COT data. So essentially what hedge funds and the big players in the market are doing and how they're moving their orders. Now, first of all, you have to keep in mind that if we are checking the data for the JPY, we're actually already checking JPY USD because all currencies on the spot are traded against the USD. So since we are analyzing USDJPY, we simply have to reverse the data that we have here. And what we can notice is that institutions with the last reports have once again started decreasing their net positions. We went in fact from having minus 55.5k net positions down to minus 70.6k net positions, showing a strong decrease again of the net positioning, with institutions that clearly have been moving back to the bearish side for the JPY. And institutions moving to the bearish side of the JPY means that essentially they are longing USD JPY, because a weakening JPY makes USD JPY stronger, and all currencies on the spot are traded against the USD. So moving back here to the daily time frame, what we can see is that this area here is quite strong previous daily resistance, which is now turned support. And the market is approaching this support with the creation of this M pattern. So when we have the creation of an M pattern, as for the case of a W formation, we could expect a potential move higher for the completion of the M pattern at the neckline. So we have a daily bullish pattern with the support that we have previously identified at the neckline of the weekly W formation, and the support that is at the bottom of the range that we have previously identified on the monthly time frame. So if the market here will go a bit lower into the support that we have around this area, what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to identifying early shifts in a trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, at that point, I would expect a potential move higher, completing this daily M pattern at the neckline. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which is linked both in description and in my bio. Here, you will have the possibility to gain access to the most complete, all-inclusive mentorship program. And in this program, you have the possibility to gain access to all my trading courses, the COT data software, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me. And if you continue to scroll down on the website past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So I really suggest to go and check it out as soon as possible. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.